Hi everyone, welcome to another Learn, Grow, Invest video. Today I have the pleasure of being joined by Kevin Richards, CEO of Kingston Properties Limited. This is not the first time Kevin is joining us, but I'm very happy for him to be here again. We have a few things to talk about based on our previous discussion. We met earlier this year when there was an APO out. That APO has since been closed, of course, but there's been other updates that would like to get some feedback from Kevin on. So we're gonna get into all of that. Before I do though, I have to just welcome everyone, and I'll ask you to just take a moment, let me know where you're joining us from so we can, officially welcome you. And so I'm going to load the intro, then we open in prayer, and then we'll get started. So let's go.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
All right, awesome. So let us pray. Lord, we thank you so much for this day and that we're able to see it. Father, we thank you for knowledge, wisdom, and understanding. We thank you, Lord, that you've given us the ability to produce wealth. So that as we go through this discussion, I pray that it will be meaningful and impactful for those who are participating. Lord, we just thank you for this community. Give us your blessings now in Jesus' name. Amen. All right. So Kevin, how are you doing?
I'm doing great. Thanks for having me on again. I was happy for the invitation to come and, as I said, I'm always available to talk about it.
And I'm happy that you are available. And, that's something that persons say in passing. I'm always testing to see whether or not they are truthful in what they say. So I'm happy that you are readily available. And yeah, I'm looking forward to this discussion. So a couple of things that, I'm just going to jump right in because our viewers already know who you are. We've met previously before. The very first thing we want to talk about, so earlier when we met this year, we're talking about the APO. So, talk to us about that. There were some very distinct things that you were hoping to raise funds for. What's the progress on that? That's the first piece. The second piece, there was a little bit of a delay in the closing of the APO. Help us to understand that one. Well, let's take that two-part question for now and say where we go next.
Yeah. All right. Again, thanks for having me on. Yeah, the last time we met, we were talking about, our fundraising activities. And I have to say, it was probably one of the longest fundraising exercises I've ever been in.
Definitely a record.
Definitely a record. Happy to have it behind us and happy that it was a success. In fact, the objective was to raise 1.5 billion. We raised 52 million above that. So I'm very happy. Thankfully, we had the upsize clause in there, so we could take that extra 52 million.
Right.
As I'd mentioned before, the raise was for a number of things. I mean, as a REIT, we're always buying properties and adding to the portfolio, but there's some specific things that we wanted to do. I mean, last year we had done a bridge loan of 700 million with VMIL. Part of the reason for the raise was also to pick up that loan, which we did certainly before the end of the second quarter. Two other things that we talked about were, one, we were going to develop 2 properties in Kingston, Jamaica.
Yes.
And as I said before, to look at, new opportunities that are out there. Given the current environment, with interest rates going up, we think it's a very opportune time to sort of look around and see what are some of the great opportunities that are out there. The last time we did, 2 major acquisitions was in 2020, during the peak of the pandemic. And I think those were particularly excellent purchases because they were, we had very motivated sellers, let's put it that way. And I think those 2 assets have performed extremely well for us since then. And we'll see what comes out at the end of the year when those assets are appraised. It doesn't mean that we're not going to be doing the greenfield projects. We still are looking at those, but at the you always want to make the best use of any capital that you have, and cash in this kind of environment is the best thing to have, and we're happy that we do have cash. So, certainly net cash of at least $6 million at least.
Okay. So pretty much what you're saying is that so the purpose of the APO was for development of 2 properties. Those properties are being worked on. You still have some cash remaining, and are there
any the loan?
Yes. So the loan of 700 million has been repaid.
Mm-hmm.
In terms of those 2 properties, can you just remind us what the purpose of those properties were? Were they rental, or were they for purchase and resale?
Sure. So one property was a multi-warehouse property that we're looking to develop, what we call small bay warehouse units. What we find is that there's a huge demand for smaller warehouse spaces. Things about 1,500 to 2,000 square feet footprint space. People are using those for multiple reasons. Some people are moving their offices there. Some people who say are in retail, they can have office, showroom, and warehouse all in one location. And it's a way of cutting costs. So there's a huge demand for that, but very little inventory. So we're going to be developing some spaces for that. The second property that we're going to be developing is a multi-story office building, which is targeted at a BPO. We are in discussions with a BPO firm who will lease that property on a long-term basis. So discussions are ongoing, and we're in the early stages of the development of that project. We've recently selected an architect as the preferred supplier. We do have a project manager on board who we're working with, and that process is moving along. As it relates to the mini warehouse one, we're going the route of a joint venture agreement with that, and we're also in discussion with a joint venture partner for the completion of that project. Hopefully, it should be maybe between 15 and 18 months development.
Okay, 15 to 18 months from now, or
once we ink the JV agreement. I mean, we're still hammering that out, but yeah. The good thing about a warehouse project is that it's not as involved as, say, if you were doing residential or something like that. You're really just giving them a shell, so it doesn't take a long time to go up.
Okay, great. So I do want to talk to you about the overall state of the properties, occupancy levels, etc. But we'll get to that a little bit later.
Sure.
Talk to us about the delay part of the APO. What happened there? What's your understanding of what happened? And I see someone here asking in the chat, has the APO shares reached the accounts as yet? And that was something I mentioned to you, that there are persons who are still asking. So when the APO closed on June 10th, it's expected that at least within a month, which would have been 2 weeks ago, everybody would have been okay. But there might have been some things there to resolve. So from your perspective, what caused the delay, and what's your understanding of where things should be at this point?
Yeah, so the original closing date should have been May 10, and that was extended by a month, a month to June 10. That's because there were 2 particular institutions who had strong interest, but they had their approval processes to go through. They have to go through their committees, or boards, or trustees, or whatnot, and that they required more time to complete. And maybe that's something that would have to look at how we managed the process if we go that route again, because you have a limited time within which you can market the offer. Sometimes that time is too short for an institution to get all their ducks in a row. But you're also restricted in how much marketing you can do before the offer comes out. So it is a tricky situation. But we decided let's work with these institutions because they're very interested in being on board. They did come on board. So unfortunately, that resulted in us delaying the close by 30 days. But we want to accommodate everybody.
Okay. So I know that brings up a question to me, because I know one of the things you're looking forward to was more retail investors having access. Were you able to see that growth? I mean, I'm not sure if you're privy to those numbers. So I know I figure the institutional investors would have had a certain, a large sum of money. Where does that leave the retail investors? Or were you able to see growth in that area?
So I believe the end of last year we had about 600 and odd shareholder accounts. Can't believe a company listed for 14 years only had like 600 shareholders. Well, certainly we had about 2,500 applications
Okay.
this offer. So obviously bulk of those would be retail. And so we're very happy that we achieved that particular
Growth, yeah. Yeah.
target.
That's at least 300% if at least, a portion of those would have been institutions.
That's
So
right,
yeah,
and most of them obviously been new shareholders.
yeah.
Obviously there were some existing shareholders like myself who bought more shares. Um, but if you can see that now with the trading of the stock, if you look at what has happened over the last 2 weeks, for example, certainly there's a lot more volume that is trading in the stock, and I think a lot of that has to do with new shareholders who now have stock, so that creates a lot more liquidity for the stock.
Mhm.
As to the question about when are the shares going to hit their account, I would assume that they have.
Yeah.
They certainly have hit mine, and the level of trading that I've seen in the stock over the last 2 weeks would suggest that they have
Yeah.
hit their accounts. If they haven't hit your account, then you probably need to have a word with your broker.
Yeah, so I'd say that to everyone, if you have not seen them yet, because certainly based on the closing date, it should be in everyone's accounts by now. So probably you're saying, Kevin, speak to your advisor or broker first and then find out what's happening. But everything, as far as you're concerned, has been done. Everything is closed off, and there should be no issues.
There should be. I mean, we put out an advisory. VM did put out an advisory that those shares were uploaded, I think, July 8th. My memory serves me right. So we had put out an advisory about them, and I think VM as well. So
Okay.
if you're not seeing it, then check with the broker.
All right, great. So you mentioned something there that I thought was interesting, right? Because there are more shares available, and we're likely to see more volatility. More volatility for investors doesn't always mean the price going up. So Howard is there asking in the chat, share price has fallen below APO issue value. Any specific reason? Any comments on that for Howard?
Boy, Howard, I'd really love to know who would be giving away their shares at these prices. I mean, I think it traded as low as 621. Whoever bought at that, I think is a lucky person. I wish I could buy. I'm in a blackout period, so I can't buy.
Okay.
I'm not sure why you would sell the shares at such a discount. Let's take the APO price out of it at such a discount to the book value
Yeah.
company. There must be some reasons. Maybe people need cash or whatever it is, but I think it's a giveaway. You know,
Yeah. Okay.
if you look at the reasons why people would buy shares, I mean, you fundamentally buy shares for value. I'm not sure what kind of assessment or analysis people are doing if they think it makes sense to sell at such a low price when, you know, I
Yeah.
saw a recent chart that showed our PE at below 10, where the market is sort of in the mid-teens. So clearly that implies a level of undervaluedness
Yeah.
to the stock in my view.
It's interesting, and we're gonna talk about the Q1 results soon. It's interesting because I mean, and this was a part of our conversation. I don't remember if it was on air or offline. And we're talking about just investors' mindset and expectation of companies, etc. Because from what we can see, and we're gonna go through the results, the company is doing well, but it's not always translating in that response from the market, something that, of course, as a CEO, you can't necessarily control, right?
Right.
So it's for persons to understand that, volatility is actually, I think personally, a good thing. It provides opportunity on both sides. For those who want to buy, when prices are low, you have an opportunity to buy, and when prices are high, you have an opportunity to take profit or to sell, depending on what your goals are. So that increase of exposure to retail investors that you're hoping for means that you have persons on any given day may choose to sell for a number of reasons. Depending on the queue, you might not always be able to get the price that you want. So if you have to sell, then you sell for various reasons. So
Yeah.
just to have persons understand that. So Yeah.
So, and one of the reasons that why we went, for a stronger retail bent is because the complaint was there wasn't a lot of volume or liquidity in the stock. So,
Yeah.
you would see the buy side would look, have a lot of buyers, but not a lot on the supply side. But if you look, if you bring back up that chart you had on there, you'd see, and if you looked at it, say, over the last 6 months, certainly there's been a lot more volume trading in the stock, over the last 2 weeks than we've had prior to that. So there's a lot more liquidity in the stock, which I think is a great thing.
Yeah.
Main reason why we went the route of an APO.
Yeah. Yeah. All right. So let me just kind of take two more quick questions here. Limitless Podcast is saying, why buy shares on the market now when I just got all the shares I needed in the APO? Was that a question for Kevin, Limitless Podcast, or that was just maybe a statement that you were making? I'm not sure. Yeah, I think he was speaking with Howard.
Oh,
there.
okay.
Yeah, I think he was speaking with Howard there. Okay.
Well, there's always the concept of dollar cost averaging. So,
Yeah.
if you bought at 750 and you can buy at 696, I don't know.
Yeah.
It certainly brings your average cost down.
Yes, it would. It would. All right. So I think that's it relating to the APO. If anyone in the chat has any questions, just post them. If you're watching on the replay, just post it in the comments below and we'll get to it. But to just kind of sum up here, everything should be resolved in terms of the APO. Share should be in your accounts. If you're not seeing it, speak to your broker or advisor to understand what's happening. But as far as Kingston properties, VM, all concerned, the matter is closed and everything should be good.
Yeah.
All right. So I wanted to talk to you next about your Q1 results that were released recently. I'm going to bring it up, but I definitely just want you to give us, the highlights. So let me just bring that up here.
Yeah. So Q1 again, we continue the great performance of the company. I think revenue was up 12%. For the quarter. And again, I have to reemphasize that we're a US dollar company, so
Yes.
our results are in USD. So if our revenue is up 12% in USD, that's still higher than inflation in any currency. So I think that is a better than average performance for the company. NOI was up 9%, as you see on the screen, and our net profit was up by 15% for the year to $716,000 US. Largely contributing to that is, the properties in our portfolio. We achieved full occupancy in all of our properties in Jamaica by the end of the quarter. We had a warehouse property that we were doing some renovations to. We completed those renovations and the property was tenanted on the 1st of February 2022. So for that, we had 2 months full occupancy in that property. But overall, we had full occupancy in our properties in Jamaica and in the Cayman Islands, and continue to do well for us. Obviously, we're getting annual increases in those rents. Additionally, we also booked some fair value gains on some of the properties that we have. We've listed the 2 condos that we have left in our portfolio. You recall, at our peak, we had 27 condos in Florida, in South Florida. We're now down to just 2, and those 2 have been listed for sale. We've booked what the list price is for the property and booked some fair value gains there. So the other important metric that we look at is our return on average equity, and that was 9% for the year on an annualized basis. Again, it's like if you had $1, what would that return be that you'd want on that dollar invested? So essentially, that's what that target is. We're aiming to be anywhere between 8 and 10%. Certainly by 2025, we should be definitely at 10%. I think it's possible that I think last year we did 9.6%. So it is possible for us to go over 10% based on the trend. But that's a target to stay in the, as a minimum 8% in USD terms.
Okay. So you mentioned here that operating expenses would have increased by 18.5%. Increase was mainly due to staff costs. So you spoke about maybe adding some team members to some of the projects that you're working on. Are these temporary increases? Are those persons a part of the team going forward? Can you explain that a little bit to us? Is this something that we can expect to see that increased amount going forward, or is this a temporary increase?
Yeah, so where OpEx is concerned, there is a trade-off. We're adding to the team, yeah, and these are permanent staff members. It's hard to believe that this company was being run with a team with a 4-member or 5-person team. We've grown quite a bit. Our target is to get to $100 million in assets by 2025. So we're actually ramping up the team to accommodate that. The good thing about this kind of business is that it's scalable. So we're adding these permanent staff members, but if our asset base moves to 70 million, 85 million, 100 million, it's not like it's going to proportionally increase the staff cost. So that's the important thing. So where the staff cost figure is likely to stay within that region, I think, for a bunch of years, because again, that is a USD figure, and if you factor in devaluation annually, we could see staff costs being a flat figure going forward. So the increase really reflects the jump in the staff numbers, by about 50% in terms of the staff count.
Okay. All right. Everton is mentioning the nature of the business seems extremely sound. In the next 12 to 24 months, what's your projection of share prices?
For Everton, if I could predict share prices for any company, I'd be a billionaire, and I wouldn't be sitting here talking about this thing. I don't have a crystal ball, but if we are to use certain fundamentals, when I was an analyst, that we used to look at in assessing a company, you look at what the projected earnings of that company is going to be. And using your words, it's extremely sound. We have a very simple business model.
Yeah.
We buy properties, we generate a particular return in terms of the net cash yield, which is how much rent we collect as a percentage of the value of that property. There's a particular thing, and we base that off what is the alternative use of funds. So if I can get 5% on $1 million, for example, well, clearly, if I'm going into a property investment, I need to earn more than that, because it's simpler for me to put it in. So we earn significantly more than 5% from a net cash yield standpoint. But additionally, these properties are appreciating in value. So if you look at a total return, you'll see a significant increase in terms of, not only the growth in the balance sheet, but we booked some of those fair value gains to our bottom line. We have a particular valuation or appraisal policy where we do appraisals on, the 2-year anniversary. So if we acquired something in 2020, then it will be due for appraisal in 2022. And, I did mention earlier that we acquired 2 properties in 2020 during the peak of the pandemic. Those properties are scheduled for appraisal for this year, including those that are already, scheduled to be appraised this year. So, let's see what happens by the end of the year and see how those appraisals turn out. But what I can definitely say is that those 2 assets have been performing extremely well. They're fully tenanted with blue chip tenants, and we're able to get annual increases in rents. Currently, as I mentioned earlier, the stock is trading at a PE sub 10, and the market average is in the mid-teens. So, if people could make some particular assessment as to what the forward earnings would be and apply that PE to. Now, there is some argument about the fact that the number of shares has increased. I think we've only increased the share capital by 20%, thereabouts. Yeah, about 20%. And the fact is, We haven't even deployed a lot of those funds yet. We do have projects lined up. Currently, we are at the very least earning, interest income on the cash. We're likely to close on a couple of projects, certainly within the next 2 months, next 6 to 8 weeks. And then for the rest of the year, we'll be, generating cash flows from those particular projects. So you can do your own assessment as to what our outturn would be for 2022, for the full year 2022.
Mhm.
Look at where, the current PE of the stock is vis-a-vis the market average, and then do your own assessment from there.
Okay.
But I certainly think it makes no sense for the stock to be trading below its book value. So markets are rational eventually. So
Okay. So let's talk about the balance sheet. Um, so we just spoke about profit, income, etc. So there's definitely growth seen there. So on the balance sheet side, really for you it well talk about how the assets are made up, and any so you'd have cleared the bridge loan, so that's no longer going to be reflecting there, but any other loans, that anything else that we may need to be aware of on the liabilities or debt side, and just anything else that you think would be relevant for this section.
sure, let me start on the asset side. The main items tend to be or investment properties, um, cash, and then the other significant item is or investment in real estate assets. So we've been doing a number of private equity partnerships in the real estate space. We've done one with CGI, which is a fund out of South Florida, and we as at the first quarter, we just had that one deal with Apex, but we just closed on a second deal with Apex. So those would be the three main categories of assets: our investment properties, cash, and our real estate partnerships. Um, on the liability side, we've basically been doing bank financing, and those we found to be fairly efficient. And given the relationships that we've had with our bankers, they tend to move fairly quickly, and I think we get fairly favorable borrowing costs. I think last year, prior to interest rates moving, on average, our loans were sub 4%, which I think it's absolutely incredible um, in terms of a rate of interest. Um, what has happened now is that now that we've added to the balance sheet with the raise, because we raised effectively about 10 million US dollars, of which 4.3 million of that was paid out, um, for that bridge loan. So we have net added in terms of assets to the portfolio another 6.5 million.
Okay. All right, so there's a question on dividends, but we'll get to that soon, by Enrico. We'll talk about that a little bit. Okay, all right. So in terms of, see if I have any questions myself. No, so you kind of commented on the highlights there. In terms of, well, I guess now would be a good time to talk about dividends, since we're seeing our retained earnings of 9.5 million US. In terms of dividends, you are known to pay, consistent dividends. But for Enrico, who is asking, is there a dividend announcement coming up? Is it, what can persons expect in that
Well,
regard?
we've been paying dividends twice per year. We paid our last dividend, I think, at the end of April. I believe it was the end of April or March of this year. So we're not due for another dividend until in the fourth quarter. Um,
Okay.
and we'll make an announcement at the appropriate time.
So that'd be around October to December.
Yeah, because we recently paid dividends. I don't think the ink is dry on that check.
Okay. All right, no problem. There was something. So I'm not sure if anyone has any questions. Read the balance sheet. If you do, let me know. There was a question that I had in the notes. I'm trying to scroll to it.
Sure.
Um, let me see here. Um, I'm just trying to trigger my memory here. If I don't remember, then I'll just move on. Um, okay, I think it had to do with the investment properties. So for
Mhm.
note, you should have had, a listing of your properties, Jamaica, Cayman, US. Um, they would this would these numbers here include the well,
The condos.
does this include any recent purchases or or anything to to that effect?
Yeah, I mean, we didn't do any prior to the Apex deal. I don't think we did any acquisitions before, so there wouldn't have been any acquisitions reflected in the first quarter,
Okay.
2022. Why the US is saying blank is because of a shift. We've reclassified the two condos that we have as listed for sale, so they just we moved them to a different category. So that's why it says US blank.
Okay. Okay. So like the properties in Atlanta, for example,
Those will
were
be reflected as real estate partnerships. I think
okay. So
that's,
so they wouldn't be listed on here. Okay. Okay.
yeah,
Okay.
investment in real estate fund. Yeah, I think that's the classification.
Yeah, I think that's the part I wasn't sure about. Okay.
Yeah, that would have both our CGI investment as well as the Apex, the Polaris at Camp Creek deal,
Okay. Okay.
and the
All
new
right. Howard
Polaris is in
has
that category as well.
okay. Howard has a question here related to what we're talking about. Any plans to venture into development?
Well, we did talk about the two greenfield projects. One is a mini warehouse project and a multi-story office building targeted at a BPO. Outside of that, no. Um, we're we find that we do very well in the value add space, and we want to stay that way because we cash flow from day one when you go into a value add opportunity. Um, Again, a case in point is that warehouse property that we bought on East Ashland Road in Kingston 2 years ago. It's older warehouse that needed improvement. We, went in and improved the property, bit by bit while we had tenants. Now that property is fully tenanted, and the improvements I think is going to lead to a higher valuation because we're able to attract tenants that pay higher rents, etc.
Yeah. I in terms of rental income, I know. Well, I'm not sure how it works for corporate. I know, for example, residential law, you're legally allowed to increase your rent each year. What's your policy on that? Is that something that you do automatically, or is that something you do based on the client, based on the location, etc.?
Well, for most commercial leases, they tend to be, longer dated, 5 years, could be as long as 10 years. And usually those increases are built in. Where a lease expires, then you can renegotiate the terms. The good thing though is that, all of our properties are, we have exemptions under the Rent Restriction Act.
Okay. 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 All right. So the final piece for the quarterly for me, I like to focus on, and since you're here, I can just ask you
Yeah.
summary and outlook. So what's your outlook for the remainder of the year? What sort of announcements can we expect? What sort of closures for existing projects?
Yeah.
And what can we kind of look forward to as potential shareholders or existing shareholders, etc.
Yeah, I mean, so the first thing that we've done so far, and ironically, this was out of cash resources, not out of the funds that we raised in the APO, was our participation in that second Atlanta deal where we acquired, along with Apex and some other partners, a 118 unit multifamily building, which will be converted to 120 units. Um, that's the first acquisition that we've done for the year. We are looking at two others right now that we're pretty close to announcing, and they're, one is regional and the other is in Jamaica. Um, those are deals, again, will be cash flow generating deals, and it stays within the space that we've been doing fairly well in. That's as much as I can say on that. In terms of the general outlook, though, I mean, there are concerns about interest rates going up and higher inflation. And one of the good things is that our investments in, say, residential property in the multifamily space is good because those leases tend to be a year. So you are able to adjust rents fairly aggressively. And in fact, what we've been seeing in the markets that we've been looking at, certainly in Florida and certainly in Georgia, is that rents have been increasing at a very high pace. Florida is now deemed a market that is so expensive that locals can't afford it, and that's because so many people from more expensive states have moved there. So there is a high demand for rental property in those markets, and we've seen significant increases in the rents that we can attract in those markets. As well as the interesting phenomenon about Georgia and the greater Atlanta area is it's become such a huge logistics hub in terms of air traffic. There's so many jobs that are developing in the warehousing space and air traffic space, which obviously is an employment generator. And the fact that it's an employment generator, you're going to have an increase in the demand for housing. So that's we're in a pretty sweet spot where that is concerned. The other interesting phenomenon about the Greater Atlanta area is there's a great thrust by a lot of technology firms to create more job opportunities in that area. So they're boosting the level of training. So there's a lot of investment by like Georgia Tech, for example, in the tech space. So you're going to be seeing a lot more persons or companies, big companies. Google is already there, Microsoft is already there in a big way. So those are huge job creators, and obviously that again is going to create the need for housing, and that's why you're seeing it play out in terms of the increase in rent growth. The other interesting phenomenon is that once interest rates start to rise, it becomes cheaper to rent than to buy. That's the reality. So people will hold off their purchases and rent instead. So again, those are the other things that are feeding into the growth in rent demand, and I expect that is going to continue because we do continue to see interest rates remaining fairly high while that happens.
We're actually seeing that in Jamaica as well, because for some reason we have a lot of persons asking us, maybe it's a space we're in for rentals and looking for rentals, and it's just amazing how the rental rates have just been like drastically growing in Jamaica. And I'm wondering I'm wondering how persons are able to afford it, because your income is not growing at the same pace as the rental rates.
Yeah.
I mean, of course, from the investor side, when you're on the side of Kingston properties, that's a good thing. So rental rates being able to rise means more profitability for the company, etc. I was thinking on the personal side, individuals are finding it hard to find affordable, attractive rental spaces. So I mean, that definitely sounds good. Atlanta. I'm curious to wonder though, does that mean you may potentially look for maybe commercial rental in that space based on everything that you mentioned in terms of the growing attraction by business, tech companies, etc. Is that something that you would maybe try to do within that area?
Not necessarily, because the spaces that we're interested in are mainly in the industrial space, so like warehouses and stuff, and that the demand for those is still fairly high. So the yields that you would earn on those properties are very low, still very low. So that's not attractive enough for us. We do like the multifamily space because from a investing IRR return basis, on a levered basis, you're looking at mid-teens or higher, which you wouldn't get that on an industrial type of property. So that's one of the main reasons why we like these value add multifamily spaces. And our target really is to grow to 1,000 doors. We're currently about 273 to 75. Once we complete the renovations at the new property, which is at East Point in Atlanta, then we're looking to add another 750 doors over the next 2 years.
Okay.
Well, not just in that market, but also we're looking at North Carolina as well as Florida is still a great place to be.
So definitely a lot more announcements to come then, because if you're aiming, so pretty much you're aiming for 400% growth in the next 2 years. In terms of the space is available for rental, that is.
I'll let you in on a secret. One thing is like I never ever buy KP stock outside of a public offering because we're always so active. There's so many things going on. I'd never want to be in a position where someone would say that I'm acting on insider knowledge while I'm purchasing the stock. So so even with the stock being where it is, I can't buy it because there's so much going on. I wouldn't want anyone to accuse me of acting on insider.
I'll tell you, one of the things we look for in our Telegram group, we're always looking to see. We're always waiting for the trading in shares announcement, right? Because we want to see who is buying. Now, I mean, of course, people have to sell at some point, right? But we like to see, managers, directors, connected parties buying, right? Because that's usually, not all the time, but usually a positive sign. I'm looking for volume and I'm looking for consistency. So if I see management buying, that's usually a bullish signal for me because of the same thing that you just mentioned. What's happening in the company, right? I mean, that's what blackout periods are for. Outside of that, take advantage, because I think it shows your commitment and loyalty to the company that you're with, and the trust in the vision and where it's projected to go. When I was at Microsoft, for example, a company that I used to work, because I know so much about, every few months we're meeting to talk about the future plans, to talk about acquisitions, talk about things on a major scale. I knew that there are things that would come down the line 2 years from now, 3 years from now, that maybe the public would not be aware of. And then, if they give me the opportunity to buy shares through the employee stock purchase program, I'm going to take advantage of that. So, I mean, it wouldn't be a bad thing, is all I'm saying, for persons to see, the CEO of the company buying more shares. I think that actually be a good sign for potential investors to see.
Yeah. I mean, the good sign to look for then is, once we release, maybe I think it would be in the 2Q results or not, what the shareholding report says in terms of what the directors and staff own. That could be a good indicator.
Yeah, man, it's something that I personally watch. I'm always looking to see how those change. If a position is increasing, that's a good sign to me, especially as the price increase, because it's easy to buy the shares when the price is low. Yeah. If you're continually buying as the price is going up, again, that signals a bullish sentiment even within the company. So I think that's a good sign. Yeah. D21 Football is asking if you offer mentorship. They would be grateful to be your mentee. Not sure if that's something you want to just have them, message you to discuss.
Sure. I mean, I do mentor a number of people, so it's not a strange thing at all. But yeah, best thing to do is to reach me on LinkedIn, and that's the best place to reach me.
Okay. So otherwise, I was gonna say D21 Football. You can either email us and forward the email, but LinkedIn works. Hopefully, you are on LinkedIn. Actually, interestingly enough, not enough persons to me are on LinkedIn, especially in our community. I don't know if persons see the true value of it. That's for another time, though. We'll get there.
No, it doesn't give them the chat option, which is, people love to talk.
Well, to me, I've spoken with a lot of persons in terms of lining up interviews for Learn, Grow, Invest, meeting new persons through LinkedIn messaging. Sometimes depending on the settings on the person's account, they may ask you to send them a mail first and not a message because it depends on their personal settings. But you can always ask for an introduction. You can always just connect to if I'm trying to get to Kevin and I see Kevin is connected to Trevon, I'm going to ask Trevon to do an introduction to Kevin so that I can, be able to message Kevin directly. So that's kind of how I do it, and it's been very useful. So
Yeah, we encourage that. I mean, in certainly some of the relationships that we've built, in terms of our partners that we've been working with, and some partners that we are going to be working with, once we made those announcements, some of those connections came through, LinkedIn.
great. Right.
It's easier to do your research and due diligence there as opposed to,
Okay.
someone
All
comes to
right.
LinkedIn.
Okay, I actually missed this question by Howard. Howard is asking any concerns about delinquencies which can be caused by costs being experienced by tenants. So I guess as costs increase for them, any concerns about delinquencies? Do you have maybe a provision for delinquency? No, those kind of things.
The provision kind of comes in terms of our insurance policy. We do have a loss of income clause in our
Okay.
insurance policy, so that covers that. But during I keep giving the story that even during the pandemic, we had pretty much like a 96% compliance rate from our tenants. And if you think about it, most of our tenants are either in the government services bucket or, the financial services bucket, or people are in, distribution. Those tend to be fairly resilient businesses or industries or subsectors, whatever you want to call them. A lot of people who say, they don't like government tenants because they pay late, whatever, but guess what? They pay. During the pandemic, the governments wrote the check because they know the importance of keeping the economies going. So we were very happy to have, quite a bit of our tenants being government tenants, and not just in Jamaica, but also in the Cayman Islands. I would say of all the jurisdictions that we operate in, the highest level of compliance is in the Cayman Islands, without a doubt. And most of those companies tend to be, those in the financial services industry. So,
Okay.
typically for a lot of them, including with the distributors, as costs rise for them, they pass on those costs to the consumers. And that's why inflation rate goes up.
Yeah.
And,
Yes.
so they pay me and I can charge more rent as well because, ultimately they pass that back on to the consumer.
Okay. All right. And I mean, 96% compliance rate is pretty good. All right. Priority Mindset is asking what are the names of the properties that are in Atlanta?
So there are two properties. They've been rebranded. The first one is known as Polaris at Camp Creek. And that's in the College Park area. And the second one is Polaris at East Point.
All right, so I'm going to sharing the announcement of the partnership here with Apex. You mentioned Polaris. Remind us of the EP, what the EP means here?
East Point.
East Point. Okay. So I'll link this in the chat. But if you go to the JC News section, the announcement was made on July 15th. So you'll be able to see that there. Okay. All right. So I think we've gotten to all the questions. I'll ask you finally, Kevin, to just... So we asked you the same question at the end of our last interview. What type of investor is Kingston Properties ideal for? I think persons don't always view, or understand the difference with the type of company that Kingston Properties is. So, share your thoughts on that and help persons understand, or be able to determine whether or not this company would fit into their investment portfolio.
Yeah, no, I think that's a great question, because one of the things that people tend to do is to think that all companies are the same. and expect that all stocks will perform the same.
Yeah.
You know, there are various reasons why stocks perform differently, and then you should make the decision as to what is right for you based on what your ultimate objective is. I mean, if you look at a stock like KP, I mean, our business is real estate. Real estate is the asset class that over the long period has performed the best of any asset class, no matter what anybody tell you. It's the asset class that has performed the best from time immemorial. You can think about all the buildings that are around and how long those buildings have been around and what the value was 200 years ago versus now. You will see the level of appreciation in those things. Now, because it's real estate, you know, we're more targeted to a medium to longer term investor. So, you know, people who are looking for, you know, the sort of nanosecond growth in value and profits and stock price, you wouldn't necessarily get that from a stock like KP. But what you'll get is consistent growth over the period. For those persons who bought, and I can just go as far back as 2.5 years ago, when we did our renounceable rights issue, the price was at $5.62, I think it was. I mean, and the stock has gone as high as $11.75. So there is growth that you can get from the stock, even in a short space of time, but more over a consistent period. You'll see the consistent level of growth over a medium to long term time horizon. So some people call it a pension stock, and this is why you have so many institutions that are shareholders, and most of them are pension funds or mutual or unit trusts. So if you want something that is consistently growing, pays consistent dividends, that's the type of investor I think that should be attracted to a KP.
Okay, great, thank you. Very, very, important point. As usual, I have to say that, just because we're speaking with Kevin Richards from KP doesn't mean that we're giving you an endorsement or encouragement. We're here for educational purposes. We actually do, we like to understand and hear from the CEOs of the companies, because that way we don't have to speculate when we look at the reports. So it's always more meaningful to have the CEOs here to give us more context, right? And that's why I appreciate this interview so much, Kevin, because then we don't have to guess. And anything that we need to know, if you don't have the answers, then the answers probably don't exist, right? So thank you so much. Really, really do appreciate it. I imagine that what we'll try to do is maybe around Q3, those results, it may be meaningful to speak to you again, because then you'd have closed out some of the projects, and maybe there are more updates that you can share with us. So I think that would be meaningful for our members.
In Q4, because we're like midway Q2. Almost.
Okay. Yes. All right. So thank you so much, Kevin. We'll definitely speak again soon.
Always a pleasure. Thanks for having me.
Thanks.
All right. Take care. Have a good one.
Take care. All right, guys. So I just wanted to remind you before we close off here, we have our first international stock review and analysis this Wednesday. We're actually going to be, I wanted to start with a company that I understand completely, and that's Microsoft. So we're going to start with that one. And what we're trying to do is introduce more breadth to our stock review and analysis. We want to cover more than just local companies, especially in light of the fact JSE has announced that you are able to trade in international companies. I haven't been able to get as much details about that yet. I was told that QMax is one of the brokers who are able to provide it now. I'm trying to get some more information, how it works, what you need to sign up, etc., before we do a video on it. But I thought we'd start, covering those companies, help you to understand how to invest in the US market and so on. So stay tuned for that this Wednesday. We have started to post our calendar of events on our social media platform, so you can see all the videos that are coming up for the week. That's one of the things that persons have been asking for. You're not always sure when we're going to release a video or what topics. So if you check our social media for that, you'll be able to see it. So we're going live on IG tomorrow. We're back on YouTube on Wednesday with our Microsoft Stock review. On Thursday, we're going to have our in-person meeting. You have to be in our Telegram group to get those details. And I believe we have a session on Saturday. The details are posted in our Telegram group as well. So thank you for watching. If you want to catch the first interview we had with Kevin, I'll link that in the description of the video. And as usual, if there's anything that you need, our DMs are open. Feel free to reach out to us. Thank you so much for watching. Be sure to leave this video a like. It really does help us. And yeah, I'll see you in the next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-Based Financial Coaching Program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.